Hi traders, and welcome to my video on the 3 inside up candlestick pattern. This is a very powerful candlestick pattern that can help you catch moves such as this one, which went for around 400 pips. You can look for this candlestick pattern on any trading instrument, Forex, crypto, stocks, commodities, indices. And you can also look for it on any chart time frame. This is a 1 hour pound dollar chart. I prefer the 1 hour charts and above simply because they contain more price data, and therefore I find the candlestick patterns are more reliable. We're looking for the 3 inside up formation in an uptrend. It's because we're going to look to enter the trend at a favorable price point, ideally on a pullback. So the 3 inside up candlestick pattern consists of a down candle, as you can see here, followed by an up candle, as you can see here. The up candle should be at least 50% of the body of the initial down candle, and then a final bullish candle that breaks out above the initial down candle there. So it's 1, 2, 3, down, up, and up breakout. Okay, so the first thing to do is to identify the trend. We're in an uptrend here. Then we're going to look to time our entry using this candlestick pattern setup. So we have it there. We mark the resistance level of the initial candle and we look to trade on the breakout there. As you can see, this is a textbook 3 inside up candlestick pattern that would have got us into this particular trend at the ideal opportunity for, as I said, almost 400 pips. Goes to show the strength of this candlestick pattern, provided you are picking it at the right place. You wouldn't really want to look for this at the bottom of a downtrend. If you could time that perfectly, that would be great. However, there will be instances where the downtrend will continue or the market will range. So for me personally, I like to wait for the formation of a trend, as we see here in this particular uptrend here. We also have a nice wedge pattern forming there, which it gives us further validity to this particular trade setup. We have also got quite a strong level of resistance here, which has been tested on multiple occasions. As I said, the 1 hour chart shows the strength of that resistance level, and now that it's been breached, we can be pretty confident with this particular setup here. Okay, so stop loss. If we say stop loss, the textbook stop loss for this pattern is on the low of the initial candle. So we would say around here somewhere, which is around 10 pips, which is a really tight stop loss for the 1 hour chart time frames. Can also use the support level if you want, or we could also use this level of resistance come support for the stop loss as well. So anywhere around 10-15 pips. Plenty of risk to reward ratio on this trade. What I would do is, as price had its breakout here, one thing about the breakout as well, if you're not going to be at your charts and you see this formation, you can always place a pending order. However, as this is a 1 hour chart, I mean, you only need to check your charts every hour. So once the price has had its breakout and it starts moving up, I would then move the stop loss. We'll just use this. So the initial stop loss would say is around here. Okay, then as price moves up to around this area here, what I would do is I'd look to lock in the trade above break even here. And then as price continues up, I'd move the stop loss just so we're locking in the position. And worst case scenario, if price does turn around, we've banked some pips, same as we're up here, basically moving the stop loss below the previous level of support. And doing this, we can ensure that if price turns around, we've maximized the move as much as possible. The last thing you want to do is leave your stop loss down here, have price come up here and then fall all the way back down, and you've missed out on the opportunity to bank all of those pips just by not having good money management in place. Okay, so I like to use a trailing stop in that way. You can see if we had done this, we would have maximized this move more or less all the way to the top. Nobody's picking an exit bang on here, but you can, just through basic money management, techniques. Milk as much as possible out of each move that you catch. That being said, if you did panic and get excited and exit here very prematurely, you can always look to re-enter on the move on the way up, perhaps by another 3 inside up candlestick pattern. You can also use technical analysis, technical indicators, and other price formations. For example, here, this breakout here could have been a potential entry into the trade, to the trend. Here as well, you know, you can draw your resistance either on an angle, or you can draw it, you know, straight across, as you prefer. It's just going to be the same principles. Yeah, so ideally you want to get in as early as possible on the trade. You don't want to risk trying to, you know, get into a trend here because you're just buying high. You want to try and buy as early as possible with good money management. Okay, so you can use technical indicators as always to, you know, if you did miss the initial entry, for example, you can look to get in with the stochastic oscillator, which when it's in or around the 20 level here, market is considered oversold. So if we look for oversold areas in an uptrend, it could be a good opportunity to buy. Also with the stochastics, when the main line is above the signal line, it is said to be an uptrend. So if we look for an uptrend in an oversold, in and around an oversold area of the stochastic, for example there, can give us some good entry points into markets that are trending upwards. There's another one as well. And these coincided with the resistance levels that we were speaking about just now, and of course the trend. So there's many ways you can interpret the inside up candlestick pattern. It's just very easy to spot on whether you're trading it as it is or you're using extra analysis. It's just good to be aware of it and keep an eye out for it on your charts, because it can signify entries into uptrends. So this would have been, yeah, as you can see, a good move to catch with the 3 inside up. You could have used the ADX indicator as well, which would just give you a gauge on the trend and the momentum. Basically with the ADX, when the green is above the red or the plus DI is above the minus DI, it suggests we have a bullish market. You also want this level here to be rising up to show momentum. I use a 20 level. I just zoom in there. So this is where the 3 inside up was initially. You look at the ADX, we can see that the green is above the red, suggesting an uptrend, and this main line is above the 20 level, which for me shows momentum in the market. Anything above 20, there's momentum. Anything below, perhaps market is going to start ranging or consolidating. 20 is just a level I use. Some use 25, some use 30, some just don't use any at all, and we'll just look at where the ADX is and perhaps to draw some divergence. You can see divergence to the upside there, suggesting, you know, higher lows, the market's trending up. So the ADX can be used as a good filter as well for taking trends. Yeah, and as we get to the top, you can see the ADX starting to slow down here, got downwards divergence. The red eventually above the green here and here, just the market slowing down. And I mean, there's the thing about indicators, they just tell you really what you can see by looking at the charts. We can clearly see consolidation and ranging market there. It may have been a good idea to exit in any case, if your trailing stop hadn't taken you out before. Okay, well, hopefully you found something useful in this video for the 3 inside up candlestick pattern. Please like and subscribe for more. Thanks for watching.